Hello, my name is Trey Booth, and I'm here to talk about the U.S. tax code. Now, this is something extremely complicated, so obviously I'm not going to go through all the thousands of pages of the details of our tax code. What I really wanted to talk about is kind of how our tax code, individual and married finally jointly, is structured. And reason is because we have a graduated tax code. So most people, they only think about, if I make $75,000, I pay 25% in taxes. That's not exactly true, and that's because it starts at the bottom and kind of works its way up. And so you hear when people talk about tax reform or tax cuts that it's always going to cut the taxes on the top and never helps the middle class. Or they're saying we're doing a middle class tax cut and we're not going to help the upper class. Well, that's almost impossible based on how our code works. So what we have here in this graphic is that the tax code starts at the bottom and that the first $18,500 of income is taxed at 10%. After 18,000, from 18,650 to 75,900, that is taxed at 15%. So if you make $18,900, the first 18,650 is taxed at 10. It's not now all taxed at 15. And the reason that's extremely important is that if you cut the tax rate on the individuals in 10% or the married individuals in 10% or to 15%, that affects everybody all the way up at the 39.6 rate, because on their first $18,000 worth of income, they pay that 10% rate. And so when you hear that there's tax cuts for the rich, well, typically you're trying to cut taxes on the middle class, but it's impossible to help the middle class without also helping those that pay all the way at the top rate. And so that's why it was important. When people see, I make $75,000, I must pay 15% taxes. That's not true. You pay 10% on some, 15% on the other. Or if you make married filing jointly, you make $100,000, well, I paid a 25% tax rate. No, you pay the 10%, the 15%, and then on your marginal dollar, that's why everyone talks about the marginal tax rate. On your next dollar earned, you pay 25%. So you pay 25% if you make $100,000 only on the amount between 75,900 and that 100,000. So that's why it's really important to know where your rate is. So that's how you can cut rates for the lower middle class, but also benefit the people at the top, because they pay it at 10, they pay it at 15, they pay it at 25, 28, 33, 35, 39.6. That's a lot of rates, but that's why it's very important to kind of know where you are on that scale and how this may impact you. I'm not sure what tax reform is going to end up looking like. I'm not sure what kind of loopholes are going to be closed, but what is important to know is that because of our graduated system, everyone pays these lower rates at the beginning, and then they only get to the upper rates on that next dollar earned, that marginal dollar. So I hope this has been helpful and informative. This has been a Investors Insights video from Five Plan Partners.